Hey everybody, welcome to Mortgage Today for Wednesday, February 14th, 2024, and oh, what a day it was. UMBS, we're getting a little bit of a bounce back effect in the morning due to yesterday's huge CPI reaction. Today we opened up 3 basis points. Stocks are rebounding after yesterday's allergic reaction to the hotter than expected CPI report. Bonds and MBS are flat. The consumer price index rose 0.3% month over month in January and 3.1% on a year-over-year basis, shelter accounting for 2/3 of the increase. The core rate of inflation rose 0.4% month over month and 3.9% on a year-over-year basis. The core rate was steadily rising on a month over month basis since this summer. Through the first 4 months of 2024, fiscal year 2024, which is October through January, the budget deficit reached $532 billion, up 16%, or $73 billion compared to the deficit of $459 billion during the same period of fiscal year 23. While seemingly expansionary, the increase was more than 100% driven by interest payments of 37%, or $100 billion, to $359 billion. Despite the rise in the deficit, the budget is so far mildly contractionary. On a positive note, it is refreshing to see the bond market make gains on the day following a large data-driven sell-off. Such sell-offs frequently involve a 2-day momentum when they prove to be temporary in the bigger picture. Central banker comments have been helpful in reframing reaction to CPI, especially Goolsby's assertion that even if inflation comes in a bit higher for a few months, as many forecasters suggest, it will be consistent with the path back to target. His speech was released at 9:30 a.m. and His speech was released at 9:30 a.m. and that is incidentally when bonds began trending toward lower yields. Making matters confusing was the fact that the European banks rallied more sharply at 10 a.m. after comments from a Bank of England official. The fact that Treasuries bottomed out at the EU close suggested the BOE comments may deserve more credit. Either way, it's unclear whether we are destined to see these gains without help from central bankers. Help remains a theme going forward. We need it in the form of weaker economic data on Thursday if we hope to see another day of moderate gains. So at the end of the day, we were up 23 basis points, ending at 100.31. So at 100.31, that puts us back up into that range that seemed lame a couple of days ago, and now we're pretty happy to be making it back up in there. So we have a floor on that Fibonacci at 100.427, and then we got dual ceilings at the 25 and 50-day moving average. You should also check out the post from our sponsor at Well, That Makes Sense. This is from our Yeah But series where we discuss both sides of a topic. This one would be, should we be making laws to prohibit foreign ownership of property? Discuss the pros and the cons of that. So check it out at wellthatmakesense.com.